CME Group launched Micro E-mini Futures Contracts. Discover how a smaller Micro E-mini Futures Contract opens the world to greater trading possibilities.
Welcome to Striking an Option, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Scott Bauer. Hey there, Scott.
Jeff, how are you?
I'm doing great. Well, it's interesting to see the Fed feud seems to be escalating as all eyes focus on the G20 meeting this weekend in Japan, but we have two big headwinds out there right now, and the markets are a little bit uncertain as we speak.
Yeah, uncertainty is definitely the name of the game right now, and going into this G20 meeting, what is going to happen geopolitically, what's going to happen on the Fed frontier?
Do you see any type of resolution coming out of G20?
Not in the near term, no. Hopefully they can make some points here to get us to a resolution somewhere down the road, but I don't see any definitive action coming out.
Fair enough, Scott. Well, you ready to get this first lightning round?
Absolutely.
Galloping gold. Well, it's really interesting to see. We broke out of that range of the upside in gold. And this is all in the wake of the Fed meeting last week. Talk to me about gold. What is going on as we almost saw a 1450 print in the futures contract.
Absolutely. We certainly have some of the market and geopolitical risk, but really after the Fed meeting last week, we've seen the dollar weaken quite a bit, which has just given all of these tailwinds to gold.
Yeah, it seems like that dollar weakness has really incentivized buyers of gold in U.S. dollar terms. But how do you potentially approach this type of range as we are knocking on 1450 for the first time in quite some time, Scott?
Absolutely. And like you said, we really have broken out of this range. So a way to potentially approach this surge that we've seen is by selling a July week 2, which is July 12th expiration, the gold 1450 1500 call spread. So selling the 1450 call, buying the 1500 call. And this spread will potentially allow an investor to collect $1,070.
No, this makes a lot of sense. You're seeing the at-the-money volatility surge a little bit, up around 18. This was priced out on the August gold future contract at 1434. But I like selling a call spread up here, but there's also a way to use, the micros. The micros opportunity is really fantastic. So there's a couple different ways to approach anytime you see a new range established.
No doubt about it. And the thing that makes this really interesting is, like you said, Jeff, the at-the-money vol approaching 18, which is pretty expensive.
Great stuff, Scott. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round, pal.
All right.
Tech top. When we talk about tech, it's been the best sector all year, yet again. So what are the thoughts here as we go into this G20 meeting? A little bit of uncertainty. Is tech going to have a little vulnerability going into the weekend?
No question it's vulnerable, whether it's, up, down, it's really going to be dependent on what comes out of the G20 here. So we are seeing an uptick in volatility.
Well, the volatility is something that gets me excited. So my trade example, I want to be a seller of the week 2 July. It's the 8,000. Yes, Scott, I said 8,000.
Yep.
Seller of the week 2, 8,000, 8,250 call spread in the E-mini NASDAQ. And this is going to allow an investor potentially collect about $356. And as we see a potential, just a pullback, I'm not looking for a big pullback here, just a couple percent, because this 8,000 strike, it's 3% out of the money.
Right, September futures priced here at about 76.87, but the important thing again, just like we were looking at in gold, is this at-the-money volatility over 19.
Great stuff, Scott, and thanks as always for coming on Striking Options, and please tune in every week as we will continue to strike options.